People want to get out of money and get into something that has more value. Gold and silver for 6 months, forget it. You should not be concerned about 6 months. You should, if you buy the stuff, you should put it away, okay, and forget about it. You'll have it. This is, this saved my family. So right now, with everybody getting very bullish because of the price performance here the last few months, it's definitely the best sector for the year.
Bert Dohmen, the legendary analyst who correctly predicted the 1987 crash, the dot-com bust, the 2008 meltdown, recently said that silver would otherwise violently keep up with gold. And that is what happened. It is not only that silver has been rallying this year, or even that it has been surging, but nearly doubling in price, about 95% in the year to date. Gold is also not lagging too far as it is up about 60%. This is also the best performance of precious metals since 1979. And it is not just an area that has been hit by this wave but the whole world. Interestingly, as gold and silver are moving to new heights, the crypto world is not doing the same. Following the massive increase in the overall market value of crypto to approximately $3.13 trillion, which included Bitcoin, the resurgence in the market has been slow, despite its nearly $190 billion recovery following significant support in big names such as Bank of America and Vanguard. The real inflation hedge flows are currently being captured in gold and silver. The U.S. stocks are enjoying the ride on the better liquidity. However, Bitcoin, despite all the marketing of it as digital gold, is in a choppy range. And this is what Bert Dohmen has been alarming against. According to him, real money is gold and silver, not Bitcoin. It is a huge misunderstanding to refer to Bitcoin as digital gold, as he states. Let's dive into today's video to uncover some valuable insights. Don't forget to subscribe and hit the notification bell so you never miss an update.
We look at charts that give us not only price, but we look at volume also. That's really important, the volume. And this is what I would say 90% of all the analysts that you hear in the media, they never talk about volume. They don't look at volume. But it's really important is if the price rise is supported by a higher volume. If it isn't, then you have to start watching out. You also have to look at support and resistance levels. Charts tell you all that. So right now, we're getting to the point on silver and gold, short term, where we're reaching resistance levels on the miners, for example. And when everybody wants to get in, it's the time to be cautious. And I always tell people, you cannot really short-term time the gold and the silver market. For the short term, we've never found anything in the roofing business for 50 years that can do that. So you have to go and extend your time horizon, and especially the high-frequency traders, the algo traders, that can put in 90,000 trades in a second. Trades, not shares, trades in a second. They can manipulate the markets over the very short term. They don't care about the long term. They care what they can do the next few hours, the next couple of days. That's their time horizon. So right now, with everybody getting very bullish because of the price performance here the last few months, it's definitely the best sector for the year, and which I like long term because nobody really has talked about it for a long time. Everybody's been so fascinated with AI stocks, and
Yes.
the AI stocks, they're getting to the point where they're getting really risky. I look at what is a real money. Real money is not Bitcoin. They call it it's a big misnomer. A Bitcoin, they always say, this is what? Digital gold? Digital gold. Imagine that. You give them real money, $100,000, or now I guess it's in the 80s, and you get a number for that. Then you take that number to your supermarket, and you want to buy a loaf of bread with $100,000, and they won't give you with $100,000 because they don't know what to do with that digital number. So this is what people forget. All this crypto stuff has no intrinsic value. So now with the crash we've seen, where Bitcoin is down 36%, all the people who thought it would be at least keeping pace with gold and silver, they found out they were very wrong because gold and silver have soared while all the crypto crap
Yeah.
it went into the tank. There's no coincidence. These things they happen intentionally. So, I mean, I've been trading this stuff since about 1975 when gold was legalized. That you as an American you could finally hold gold, and so there's so much manipulation. It's the big bullion banks, the J.P. Morgan, etc. They're traders. They've been charged and convicted of manipulating these markets, all markets, and they've been multi-billion-dollar fines. But that's cheap. That's pocket change because they've made tens or hundreds of billions of dollars with their manipulations. So you always have to consider where so much money can be made so fast that it's not going to be unmanipulated. So if you're going to take gold and silver, you have to look at the long term, which means you cannot be leveraged. I've warned in every issue of our Wellington letter, do not be leveraged, because the leverage kills you. You can have the best investment in the world. And right now I see, for example, ETFs. ETFs, when they first came out, they were like mutual funds that traded like stocks. So you could buy and sell them anytime during the day. And then finally they came out with the leverage, 2-to-1 leverage ETFs. Okay, so now you could get leverage. And then suddenly 3-to-1. So lately, the latest thing is 5-to-1 leveraged ETFs. That means if the stocks held by that ETF go down 20%, which is basically what a bear market is, and the ETF is worth 0. Okay, you have lost all your money. People don't consider that. They say, "Oh no, I would get out before that." Well, only you cannot get out because it's just like the stocks. We've seen the very popular stocks. They open the morning, the trading on huge down gaps of 20, 25, 30%. And the human nature does not allow people to sell at that time because they say, "Oh, I've got a loss now. I can't sell because I have a loss." No, when you have a loss, that's the time to sell. That's the best sell signal you can get. When you have a loss, get out. Small losses are much better than big losses.
The U.S. economy has been weakening months back in terms of jobs, housing, even in terms of the daily grocery bills. However, there is an entirely different narrative that is the stock market, and it is largely due to the Magnificent Seven: Apple, Microsoft, Amazon, Alphabet, Meta, Nvidia, and Tesla. These technological powerhouses control all the aspects of AI and software as well as the production of chips, and their excessive influence has propelled the market to heights it has never reached before. Bert Dohmen says that this increase has nothing to do with the actual economic power. He feels that the markets are surging upwards due to the fact that the central banks, most notably the Federal Reserve, are diligently pumping up the brown in the market with liquidity. Dohmen contends that the dollar is merely heard to be strong when contrasted with other weak currencies, and the real measure of success is gold, which he terms as the single real money. Now let's redirect our attention to the video.
I see huge risk. And I think one thing that people are really missing is why the markets have gone up. And to me, this is, we're seeing really a rush away from currencies. And this is not just the U.S. Everybody talks about the dollar, they want to make the dollar cheaper and so on. But the dollar value is based on a basket of other currencies. So you're measuring the value of the dollar in terms of other currencies, not in terms of real money. The only real money is gold, and this is so important to realize, So right now, what I see is the stock market rising. Of course, it's due to the Federal Reserve. They have been not been practicing tight money. They always say that, but that's a blatant lie. They say, "Oh yeah, we still have quantitative tightening, and we're going to relax in December and remove that quantitative tightening." That's a bunch of baloney. Money supply M2 is now at a new record high. bank loans are at a new record high. That does not happen when you have tight money. The bank loans shrink when you have tight money. Money supply does not rise to new highs when you have tight money. So we have loose money. And the loose money is fueling the markets. And the U.S. is not the only one. All the other countries are doing the same thing. So I think what we're seeing is worldwide is a rush away from currencies because they're really making our currencies cheaper. And if you don't believe that that has an effect, I was used as a good common denominator for the value of money, the purchasing power, a Dairy Queen cone, because when I was young in high school, we'd buy a Dairy Queen cone for 5 cents. And if you wanted it dipped in chocolate, it would be 10 cents. Now that same cone, I think, is about $3.50, something like that. So the same cone, but suddenly the numbers get much larger. So our measuring stick is shrinking. And that's the way to think about it. Our measuring stick of value for money is shrinking. So our yardstick is getting smaller. But suddenly the yardstick is only half a yard long. So you need more yardsticks, right, to measure the same thing. People finally realize that the cryptos are dangerous, and with the Stablecoin Act now, I think it makes it clear. I mean, I wouldn't touch that stuff with a 10-foot pole. Right now, everything is false. Everything that we hear is false, especially when you turn on TV. That's why podcasts like yours are so important, because you really have people who don't have an axe to grind. We don't sell precious metals. We're not brokers, etc. The only thing we sell is our research. Yeah. So, and I've always avoided conflicts of interest. I know it's when gold and silver are rising sharply, everybody wants to get into that business, like Tucker Carlson. We always avoid it because I always say the bull market's always then. So what am I going to do if I have 20 people sitting there at desk selling gold and silver? Am I going to say, oh, we're going to disregard our sell signals? In 1980, right at the top, the price was $6.94 on gold on the way down. We said, that's it. We're going into a 20-year bear market on gold. And people wouldn't believe it because they were looking for $3,000 and gold was $800 at the high in 1980. We said, no, it's a 20-year bear market. And lo and behold, that our cycle study was so accurate, and it really even surprised us because cycles, they vary a little bit from left to right. And but the bottom was exactly the year 2000, 20 years later.
The conditions for a precious metals super cycle, strong demand and constrained supply, appear to be lining up. Whether 2026 will indeed mark the start of the biggest metals bull market in decades remains to be seen. For now, record prices and bullish forecasts suggest the potential is there. As an investor strategy, Seasoned Voices advocate maintaining meaningful allocations to real assets, gold, silver, and Bitcoin, to hedge against inflation and market turmoil. We'd love to hear your thoughts in the comments below. If you enjoyed this video, give it a thumbs up and make sure to subscribe for more updates. Thanks for watching.